G'day folks, welcome back to another update for gold and silver. Now both have broken higher since our last update. We'll go through some back testing on that as well. Before we go any further, make sure you hit that like and subscribe button to support the channel. And we did a +1 video a couple of weeks ago and we covered various strategies, so do reference that to get a better understanding into some of the strategies we cover in this video and others if you're new to the channel. In terms of the outlook, both gold and silver have a bullish outlook, with silver showing recent outperformance. Gold's rally is fueled by central bank demand and its safe haven appeal and global economic and geopolitical uncertainties. Silver is benefiting from both its role as a safe haven and growing supply deficit driven by strong industrial demand for the green energy and electric vehicle sectors. Geopolitical conflicts, particularly in Middle East and Eastern Europe, continue to add a risk premium to both metals, providing a strong fundamental floor price. So looking at silver first, we'll look at the long-term trends. On the weekly here, we've got very bullish momentum above the moving averages on the price, but also a bullish momentum on this CCI1500 down here. It broke up from there in the last month or two. Now, there's no sign of a pullback yet, and what we need to do, I'm going to extend that trend line to that point and also that trend line on the CCI. So looking at that, it's a very long-term bearish divergence, so just be aware of that. We're going to see it pull back at some point. When it does pull back, we're going to start drawing a target range. It's probably too early to draw a Fibonacci retracement target until we see a bit of a pullback coming back towards these moving averages. So the weekly is bullish. The daily is also bullish. Now notice it's also broken above this previous resistance at 42.74, making new highs on both the price and the CCI. And looking at it as well, you'll notice we've got another extension on that bearish divergence. So that's still bearish on the CCI, lower highs versus high highs on the price. Now I'm not going to draw a resistance on that yet. It's where it was previously. I'll just delete that one. That could go a lot higher actually, so we'll just see how it goes in the meantime. So bearish divergence, but bullish momentum at the moment on the daily. On the intraday, the 1 hour time frame, again bullish momentum. That would have been a nice little trade to take if you're going long. The last diversion we had was back here. We had a bearish diversion. You can see there we drew a target and it dropped right below that, straight through that target range to about the 100% retrace if we drew the Fibonacci to that level there. Now since then, there's been no other divergence. Now what I'm going to show you now is the back test. And this is assuming going back from this period back here, which was around about the 19th of May on the daily chart. If you're trading on the hourly, you would have gone long when the CCI and the price were above the moving averages. Now, what I want you to notice is, you'll notice here the drawdown, it used up all your capital. If $100,000 was the baseline or your starting balance, it's used all that up due to that price decline, and you've added to that to the contracts. Now, just be aware, for a couple of reasons, you should have got out of this trade well before that decline. So the first point being, so back here, for example, well, that was actually around, that point there on the of the daily, you'll notice it was below the CCI moving averages on the CCI, but it was also hit the moving averages of the price. The CCI is the key here. You'll notice there was on the daily, there was a bearish divergence. I didn't mark it, but you can see it very clearly from that high to there. It's a bearish divergence versus the same period on the price. That actually pulled back in that little range there. So always pay attention to these divergences, as I always say. So you should have got out of the trade whenever the CCI hit on the daily hits the moving average range. So you would have got out somewhere in that range there. But also notice on the 1 hour time frame, I've marked these bearish divergence. So at the very latest, you would have got out when the price moving averages started bending down there, and so are the CCI. So when they're both going against you, it's worth closing out as a stop loss there. So that you would have done it before that drawdown, which means you would have made a nice little profit before you got hit with that drawdown. So if we recalibrated that back test to this point here on the 22nd of August, or approximately 24th, whatever that is, starting back here, you would have made some nice little gains there. And again, notice a couple of things. On the daily, we had the CCI hit that moving average range at that point there. So you should have got out of the trade then, but notice as well we had a declining, a bearish divergence versus the price, declining CCI versus increasing price moving averages. So again, as soon as you see that, you might have had a contract open at that point, but you should have got out of it as soon as you started seeing the the price decline along with the CCI. So for gold on the weekly, first off, again making new highs slightly since our last update, but notice as well on we extend that trend line slightly, the CCI is still dropping, and the price is still rising. So it's a very slight increase since our last update, and that is still a bearish divergence on the weekly, but still bullish momentum on the price. On the daily, it's bullish momentum, but notice the CCI has pulled back. It's actually consolidating around that resistance area at 36.86, just broken above it, just sticking its nose above it. The CCI is just above that moving average range as well, so it could possibly go higher, although I'd hasten to say it's probably going to pull back. You'll notice here that high on the CCI at the moment on the daily is actually lower than that one. Again, this could keep going higher if we drew that's also declining as well on the price. I won't mark it, but that's a declining CCI. So it's not a bearish divergence per se, but it is a declining CCI and also a very slight declining price as well from that previous high there. On the hourly, again, since our last update, we had this bearish divergence. Let's just see if it remained. So that would have been slightly lower. That high would have been slightly lower than that point on the CCI. So if we move that up to there, that's still a bearish divergence. Now, if I was to draw a Fibonacci on that, let's see if it hit anything. Sometimes they fail. This one looks like it may have failed as well. So it hasn't hit it yet. I'll mark that as a target area. So if the price retraces back, at the moment the hourly is looking a bit fairly strong at the moment, breaking higher through that resistance. The CCI is also breaking higher. So again, notice as well, it's probably close to calling it a bearish divergence as well. The CCI is dropping. The price is about almost equal with that previous high there. So I'm not going to mark it yet until it goes up just a bit higher, and then definitely call it a bearish divergence. But I'll keep that target there. We may see it break to the downside sometime soon, possibly. Now on the back test, again going long from around about the 22nd of August, around this point here, going long. And again, you could have let it run on the hourly until that the daily broke into the CCI point at that level there, but also paying attention to any divergence on the 1 hour time frame if you're trading on the 1 hour. That would have been your first, to that point, would have been your first level of bearish divergence. It didn't pull back. The CCI did, but the price didn't. Just keep tracking it. The price kept going higher. The CCI kept dropping. That also was a little bearish divergence. That there was another bearish divergence. To that point, the price kept rising. You just got to keep tracking it until where we are today. That's still lower than that point there. That's higher. So again, as I said, that's still a bearish divergence. The CCI has dropped off, but the price hasn't actually hit its target yet. So it's also probably a good idea to track these smaller divergences within that bigger range as well, to sort of possibly get it in and out when you see the price drop below on both the price and the CCI. When you see the price and the CCI drop below the moving averages, and then go long again in accordance with the daily. So long as the daily's in a bullish momentum, then going long when both moving averages and the CCI and the price are in an uptrend. Make sure you hit that like and subscribe and share button. If you enjoy the content, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across regions of the world's markets. Thanks, and talk to you in our next video.